Hello, 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 and welcome back to Without the Bank. Thank you very much for being here. I appreciate it. Hey, if you guys are enjoying this podcast, please share it. And not share it for my sake, but share it for everybody else's sake. Because here's the deal. I have been hearing a lot of chatter on the social medias about indexed UL, VULs, rates of return, all the stuff that is not infinite banking. And people, for whatever reason, are getting all wrapped up into this stuff. That's not what we're talking about. And so if we want true infinite banking, this is the podcast. Because that's all I teach, is true infinite banking from the roots of the man that developed the concept. Speaking of which, the man that developed the concept, our Nelson Nash, Become Your Own Banker. I want to review his chapter today. That is an even distribution of age class. Now, this chapter really goes over buying life insurance on grandkids. And the biggest reason that Nelson said to do that is because that is the most affordable, right? Because grandpa and grandma are probably in a position in life where they can be buying insurance on grandkids. Now, as awesome as that sounds, it's not always that easy to do. Because grandkids, in order for the grandkid to have insurance, mom and dad have to have insurance. And I run into a lot of grandparents that the kids just don't care. They absolutely, frankly, don't care that they don't have insurance to insure the grandkid. And so something to think about. Life insurance companies, one of the companies that I work with several, but one of the companies I work with says that's fine, grandpa and grandma can own the policy, but they can't be the beneficiaries. So just trying to mitigate risk is all that they're trying to do. But there are some restrictions when we start getting into grandparents owning policies. But what Nelson is trying to teach in this chapter is that it is just what he's saying, an even distribution of age class. So if grandpa and grandma are always buying life insurance on the grandkids, and we do that with every single generation, we kind of skip that generation and don't buy it on our kids, but buy it on our grandkids, we're always buying it at the same cost. And if we're teaching them how to use it, I call it generational wealth. If we're teaching them how to use it and we say, hey, you know what? When so-and-so passes away in the family, that death benefit needs to go back into more life insurance. That's generational wealth. That's what the Rockefellers do, or the Rothschilds do. Or the Rockefellers, sorry, that's what the Rockefellers do. And so if we can keep that cycle going, why wouldn't we? We're buying a discounted dollar. So if we're going to buy $1 on kids, we're probably 3, 4, 5 cents for every dollar. That's a big deal, because now when we keep recycling that dollar, it's not costing us any more, especially when we're buying it on the same age class. Is that a likely scenario? Ideal, absolutely ideal. Anything that Nelson and I have wrote in our books is an ideal situation. Is it a situation that is going to actually happen? I don't know. Maybe, maybe not. I had a client yesterday that owns several very successful businesses, millions and millions of dollars, and he has 3 children. 2 of them are absolutely not entrepreneurial at all. The third one is, but that one is at home with kids. And so the concern there is I can leave them all of this stuff, but will they go create bigger and better things and be smart about what we're leaving them, because their thought process is not entrepreneurial. They are amazing employees. They maybe they don't maybe have the risk tolerance. And so every family, I believe, every family I talk to we're running into that same kind of issue, is that mom and dad, or mom or dad, whatever, one of them might be super entrepreneurial, and then the kids or the other spouse is not. Well, what happens when we're not is the money just falls stagnant then. And that is why they typically say by the third generation, we've lost everything that we've built. And so we need to think about the big picture of it, or if we want them to understand it, yes, we need to teach them while they're little, which Nelson talks about as well in this chapter. Teach them while they're little, but as they get older, if they don't understand it, then maybe we need to have a trust set up so that there's specific instructions in that trust of what you need to do with that money. And if they're not going to be entrepreneurial, you as the parent or grandparent need to understand that. Because here's the other thing. If grandpa and grandma own a policy on a grandchild, what happens when grandpa and grandma pass away? They were owners of that policy. They paid that premium. So now, and especially now when everybody's having kids later in life, grandparents are not going to have all this time to be paying these premiums. So what happens is grandpa and grandma pass away. The new owner of that policy is most likely their son or daughter, right? And now they have to pay these premiums. Will there be money to pay premiums? Now, I have set it up in the past where I have told clients, if you're going to buy a policy on the grandkids and something happens to you, then so much of it needs to be put in your trust that so much of your estate needs to be set aside to pay for X years of premium. Maybe it's until the grandkids are 18. Maybe it's until they're 25. Maybe it's 10 years, 15 years, whatever. And then the parents are instructed to take over. But in order for this whole system to work, everybody has to understand what's going on, which is most likely going to include a family meeting, right? Where everybody talks about it. And I absolutely love it. I have a colleague in Canada that they have a family meeting. It's his wife and his kids and his sister-in-law and brother and nieces and nephews. And they talk about Nelson and they go over the book. And the kids are of all ages, teenagers down to grade school. And they've been doing this since the kids were not even in school. But they all understand Nelson. They understand the concept. They understand the importance of the life insurance. And maybe not all of them are going to be entrepreneurs. That's okay, as long as you still understand what mom and dad and grandma were trying to accomplish, right? So we can buy these policies on each one of the grandkids. But here's the other thing. As you're insuring grandkids, the insurance company says, well, you got to have the same death benefit on every grandkid because we don't want you to have an incentive over one grandkid than the other. So money becomes a topic, right? I've had clients who have multiple policies on grandkids. The first grandkid is born and they are so super excited. We're going to stick like $2,000 a year into this thing, or 3 or 5 or whatever. I'm like, but that's just number one. What happens when we have 4 children or 5 children and we have more than one grandkid? Now we have to make sure that we have enough to put into every one of them equally. Same thing when mom and dad start policies on little kids. We have to have an equal amount for every child, an equal death benefit amount, not premium amount. Because the life insurance companies don't care about premium, they care about death benefit. So an even distribution class is important when we start looking at starting policies. Now, this is what Nelson starts this chapter out with. A good man leaves an inheritance for his children's children. Proverbs 13:22. I feel like that is very important because we have this mindset that says, you know what? We don't need to leave anything to you. It's not a big deal. We had to fend for ourselves, so you should fend for yourself. Well, if we're all fending for ourselves and nobody's actually taking the initiative to set things up and get better, if we never have the financial means to maybe get better or the financial education to get better, how are we supposed to get there? Right? Somebody needs to share that with us. If we're out seeking it, that's one thing. But so many people don't even know where to go. They don't know so many things exist. So can we give them something so that we are leaving this inheritance to the next generation? Nelson also has in this chapter, it's going to take 40 years to get this done. It's going to take multiple generations. So many people want to go, oh my gosh, I want this tomorrow. You don't get it tomorrow, honey. It's just not happening. It's going to take time. Remember, we talk about forestry in this book. It takes time to grow the tree. It takes a bank several decades to get going, to have other branches. This is the exact same thing. It's going to take time, and it's going to take thorough knowledge of the concept. So if you are the parent or grandparent buying a policy on the grandkids or kids, are you sharing the knowledge? And we just got done talking about that. But are you actually sharing the knowledge? If you're not sharing the podcast, if you're not sharing these books, are you sharing the knowledge so that that next generation knows what they're doing? Now, I have family members that don't pay attention. Oh, believe me, I'm willing to share. And they get sick of the sharing. I am willing to share. I want to teach everybody. But if they don't want to pay attention, then how am I going to react to that? Me personally, not very kindly, because I'm kind of ornery, right? If I'm going to give you something, why should I give it to you if you're not going to pay attention and manage it? So that you can just spend it? Yeah, probably not. Probably not. So there's a lot to this chapter, even though he's really just saying, hey, go buy life insurance on your grandkids and everybody should do that. It goes far deeper than that one simple little suggestion. But he also makes a great comment here, and he said, once you've created it, perpetual motion in your family's financial world. It has created perpetual motion. Jeez. It has created perpetual motion, but that motion has to keep going, and it won't keep going if we don't have the financial education, right? There are a number of significant advantages, and I'm just going to read these through real quick because these are super important. One, it covers multiple generations, promotes long-range planning. Yes, we've already talked about that. Underwriting problems are minimized. The sooner you can get somebody insured, the less likely you have underwriting issues of health concerns, those sort of things. The sooner, the better. Nelson knew this firsthand because he had a granddaughter that had cancer, and she was uninsurable. Tax-free buildup of cash over a long period of time. The sooner that policy starts, the more cash that accumulates. Okay, doesn't mean you shouldn't do it if you're old. It just means it's going to accumulate faster. Outlay of very small premiums compared to the ultimate yield. Why? Because kids' policies are typically very inexpensive because they're young and it buys a lot of death benefit. Generation pays the premium that can afford the premium. When death benefit occurs, the system becomes self-sustaining, meaning we're going to take this death benefit and we're going to buy more life insurance with that death benefit. We don't need to come up with money out of pocket to do that. We receive death benefit. We're going to take discounted dollars and buy more discounted dollars. Okay? Passive income is assured. If they need money during retirement, there's money there. The wealth mentality is transferred. It is transferred if you show them what they have. It is crazy how many people I talk to that grandpa and grandma bought a life insurance policy on me, but I didn't even know it until I read this book. I have quite a few people that happens to. And why? because Grandpa and Grandma knew how important whole life was. Money won't buy happiness, but poor stewardship of money will steal happiness. How many of us have gone through somebody passing and the family is ripped apart because we do not understand the stewardship of money? It's a big deal. Okay. That is that chapter. We are almost through this book. It's been taking me forever. I apologize. However, we are almost through the book. So if you guys have questions, if you have not gotten Becoming Your Own Banker yet, if you have not gotten Life Without the Bank, I have them as a bundle price on the Without the Bank website. So go there, grab it. If you have questions, concerns, comments, suggestions for podcasts, email me at maryjo@withoutthebank.com, and I am happy to read those. Okay, let me know if you need anything, you guys. Otherwise, you have a fantastic rest of your day.